bonds. They caused a tizzy overnight on 8/7. Stock market fell 500-600 points as far as Dow. The S&P fell, I don't know, 100 points, 80 points, whatever it is. The media went nuts. By the way, this is Nick looking at bonds. What happened? What can happen? Is this a good level? And all of that. So this is one Main Street opinion right here. Before I forget, at the end of the video, there'll be a pop-up on the left-hand side to subscribe to the channel on YouTube. It's free. I do post a lot. More so these days because there's a lot going on, and I think it's important to spread the knowledge. Nothing here is emphatic. This is my personal opinion, and I can support it with charts. That's it. So I'm not an economic expert, but I do have an opinion, and I think it matters here. So here's the TLT, which is the ETF to show the 20-year bond, the price of the bond. So if people are buying bond, the bond prices rise, this is what rises. The opposite side of it, when this rises, the bond yields, the rate that you collect for selling the bond, it falls. This is always the case. So if you're looking at the TNX, you'll see the inverse. So clearly, it's been on a tear. This is a one-year chart, daily chart. Every candle is 1 day. And this is eyeball 26%, 30% from low to high. I have a lot of lines. They do matter. So if I didn't put my lines, they would look like this. But I look at them and I mark them up and I keep the lines. I put a circle here because I thought this was an important zone. Clearly, I was correct. And I put a box here. I can't remember why, but we'll find out later. Clearly, I was correct because look at the action that happened inside that box. This probably was months ago, if not a year ago. I'll check in a minute. So I put an arrow here. Clearly, that was correct. The most correct thing was this little squeeze right here. So at this point in time, at that point in time, I shared charts that showed the action up until this day here with the two outcomes. I probably would have said something like higher lows, range is tightening into a point, and a breakout is coming. Out or down, I don't know. Up or down, I don't know. I gave the upside potential and the downside potential. Clearly, the upside potential delivered and then some. But when it delivered, it threw the action into this box. It consolidated inside the box, and then they decided, you know what, screw it, to the moon. 3 days ago, I was chatting with friends. I said, you know what, the TLT looks like it's headed to 144 or 145. I forgot what I said. Breakout in the TLT. How about the November calls? I'm buying them. They're $1. I think today we were probably $4, maybe $4.50. If I bought one contract, I made $300. So if you bought 10 contracts, you made $3,000. So this was a good call. But now what? So now this has happened, and I'm looking at the TLT. I came home and I listened to the news. Oh my gosh, bond, the yields crashed. They recovered, but they crashed and the market went crazy. The whole morning CNBC could not get over the fact that the yields are falling. So I looked at it from the silly perspective of the guy on the street. What? Okay, so if the Federal Reserve drops rates, they call it a QE. Everybody celebrates. But when the market actually drops the rates, you call it a crisis? That was silly. So when the S&P was at 28.22 this morning, I said, I'm buying calls. This is a good time to go long because they're selling the market on a good note. Yields are falling. It means my mortgage rate is not going to go up. It means I'm going to have more money to spend. Yes, I know it wasn't the mortgage rates that were falling, but they all move in tandem. Eventually, they're going to catch up to each other. So when the Federal Reserve said, we're cutting rates now, the market said, okay, we'll catch up. So they actually beat the Federal Reserve to it. So Powell said, I'm cutting now and I'm going to look to see if I'm going to do it again. The market said, nope, forget it. You're going to do it again and maybe again and again. And because now he cannot not cut. He has to keep up with the market. Otherwise he will cause a slowdown because he controls the shortest. He controls the overnight lending rate. The Federal Reserve controls what banks charge each other overnight, basically. They borrow at that rate and lend to us at the long rates. So if the long rates are falling, like the yields today were falling, and the short rates don't fall, then it becomes not profitable for the banks to lend money. So this will cause a slowdown in the economy. That's why he has to match. So that's my opinion. Now looking back at the chart, now I'm in this position. Do I buy the TLT? I got this question 10 times today. Everybody says, you got to buy it. Or do I short yields? Or where's the bottom? It's easy. I can tell you I cannot find the answer from this chart all by itself. I have to go at least to a weekly chart. So now I'm getting more information. This is 5 years. Same chart. Again, if I hide everything, boring. These are my notes over the years. Okay, I'm going to do something else. I'm going to go to a monthly chart. I think will probably be easier to see. Okay, so now this is 2003, 2002 on. Each candle is 1 month. Okay, so this candle is not done. It may be red at the end of the month. I don't know. Okay, so this is 1 month per candle. All right, so clearly it's not an obvious entry point into this ticker, whatever this ticker is. Now I forget about the fact that it's yield or bonds. I know that they tried to do this before in 2000 and I'm going to eyeball it, 16. Oh, election right here. And they failed. And they're trying to do it again. Okay. They kind of did it here and they also failed. And they kind of did it here. Well, they had a burst and failed. So let's see here. We have the 2010 crisis, the 2008 crisis, 2011, whatever happened there, I can't remember. The flash crash, whoa, that was a day to remember. 08 crash. So a whole bunch of stuff happened. Rate cuts, rate hikes, whatever. And here we are. From this, I would say to myself, this is not an ideal point to start long, this ticker, whatever this ticker is. This is too sharp of a wedge for me to chase this high. If something happens, the fall can be sharp. Now, I know there's the floor to bonds just because TINA. What is TINA? It's an acronym. It's an acronym that says there is no alternative. Okay, so these are U.S. bonds. The U.S. bonds still pay. Okay, they fell today to 1.6 or whatever the low was. It's negative abroad. So if you go to Europe to buy bonds, you don't get your money back. You get less. So how is that an investment? So if anybody wants to invest in fixed income, they have to come to the U.S. There is no alternative. Otherwise, you're going to guaranteed to lose money, basically. You're saying, here, hold my money, Mr. Bank, Mr. Government, Mr. Federal Government, wherever it is in Europe. I'm going to lend you money. And okay, I know you're going to give me less back. Like, what? That doesn't. It's negative rates. Same in Japan. So there is no alternative to buying the U.S. bonds. So they're not going to collapse. If they fall, I'd be a buyer of the TLT at some point. But there's also the TINA on the stocks. It works the same way. If anybody wants any returns, the central banks, the Federal Reserve here, the ECB there, and the Japanese bank are forcing everybody into riskier assets. So they're forced to go into stocks. So just like there is no alternative for U.S. bonds, there is no alternative to stocks, most likely the U.S. And look at this. If I extend this one, these two candles are pretty interesting to me. So this is a zone I would look at. So if it falls, that would be the first place I would look at. So I'm going to go back to a lower time frame, back to the daily. Okay, so this is just too much. I call these, too hot to short and too high to chase. So if I wanted to short it, I'd buy puts at the money or a put spread at the money and basically double my money if it falls. Or I can buy the 132 put and hope it falls to it. I don't like to buy and hope, but I definitely don't want to buy to chase it up from here. So as far as this event today was scary to the markets, I think they misread it because rates are falling. That's good for borrowing. That's good for the economy. That's good for me. I'm in a mortgage that's variable, so I'm not too worried about it. This is the S&P the last couple of days. So this was the open today, and it fell off a cliff. The range from here, this is 28.90 something, to here, 28.23. It's huge. So if you and I were talking this morning, I'd say I bought calls at 28.23. and then it rallied. If I'm trading the futures, I caught 60 points, 70 points easy. So that's a lot of money. So that's a lot of nervousness. Why? Because of the VIX. The VIX is too high up here. People are nervous. I don't know why they're nervous. The Fed net is out. The only thing that could mess this whole thing up is a black swan. We know about the China tariffs. We know about the hothead, President Trump. We know about the hothead, President Xi. We've got eagles all over the place. All this is known. There's nothing new today except the fact that the TNX fell off a cliff. This is the opposite side of the TLT. This represents the yields on bonds for the 10-year. Okay, so the one thing that scared me this morning nobody talked about. It's this chart. This is the yield curve. Remember when CNBC said, "Oh my God, the curve is inverting"? Well, that's their next headline. I guarantee you, if we had another day like today, CNBC would be leading with a crisis with the yield curve is almost inverted. If this falls before 1, then there's a problem, because that's the 10/2. It's the 10-year yield divided by the 2-year yield. So if the balance between short and long rates, if it's almost the same or lower to be short-term versus long-term, that banks will say, nope, no more money for anybody. We're going to sit on our cash. And the economy would slow down. So this scared me the most. And I'm more worried about the 0.2 drop in this one than the drop in the TNX itself. So I would keep an eye on this one, because I guarantee you another day or two like this, CNBC will be, markets in turmoil, because there'll be some tizzy. Speaking of markets in turmoil, this is longer than I wanted, but I think it's important. There might be a 100-point move in the next couple of days, up or down, I can't tell you, but it's brewing. We either going to get 29.90 plus or 27.90-ish. Market 29.90 or 27.90 in the S&P. This is the E-minis. Consider it the SPX. So it's coming. One of those two. All right, Nick signing out.